and you should carefully review your risk tolerance before you invest. If you don't feel comfortable investing in volatile assets or only have a small sum of money to invest, you may want to consider other investment options. Diversify your portfolio. The best way to protect yourself from investment losses is to diversify your investment portfolio. Your primary investments should be low risk, like government bonds or index funds. Next, you should go for medium risk investments, like real estate or corporate stocks. High risk investments, like penny stocks or Bitcoin, should be your smallest and least prioritized investments. Bitcoin is essentially the icing on the cake, the investment that could yield substantial profit but which you could still do fine without. Despite the many differences between buying Bitcoin and buying other equities like stocks, there are inherent similarities that must be addressed. In fact, the actual strategies for investing in Bitcoin aren't all that different from their stock counterparts. That said, many of the strategies for buying Bitcoin have to do more with investment timeframes. In particular, investors may exercise one of the three most popular Bitcoin investment strategies. Buy and hold Bitcoin. Hold Bitcoin long term. Trade Bitcoin on short-term volatility. Those familiar with Bitcoin are probably already aware of the concept between buy and hodl. Those who aren't, however, can get caught up quickly. Hodl, an intentional misspelling of hold, is merely an investment philosophy. Short for hold on for dear life, hodl suggests the best Bitcoin investment strategy is to hold it forever. Those who subscribe to this strategy are more than aware of the asset's volatility but have a strong conviction for its future prospects. Therefore, this strategy will require investors to weather the many ups and downs of Bitcoin price fluctuations without selling. Not all that different from the first strategy, investors who want to hold on to Bitcoin for the long term are convinced it will appreciate in value over long periods of time. However, unlike the hodl strategy, long-term holders may be inclined to sell once they are satisfied with returns. These investors are convinced Bitcoin will increase in value, perhaps as serving as a new store of value, like gold, but aren't against selling for a profit when the time is right. One of the most popular strategies for investing in Bitcoin relies on the asset's volatility. If for nothing else, Bitcoin has become synonymous with violent swings in valuation. Simply looking at a one-year chart will identify just how volatile Bitcoin can be, which bodes well for short-term traders. Not surprisingly, this strategy will have investors ride the ups and downs, selling at the peaks and buying on the dips. Of the strategies discussed, this is definitely the hardest and exposes investors to the most risk. However, it may also compound gains faster than those previously mentioned. Overall, Bitcoin is a popular type of cryptocurrency that utilizes a large chain of interconnected computers to store and protect your digital assets. Bitcoin is a highly volatile asset that's prone to large and fast swings in value, which presents an opportunity for large returns but also poses a tremendous risk. It is critical that you learn how to invest in Bitcoin responsibly before making any decisions. Be sure to diversify your investment portfolio to protect yourself from marketplace volatility.